Good morning, everyone, and welcome to the European Crossover webinar, and welcome to FOMC Day. We just got some Italian data just come in right now with industrial orders come in now, 2.9%. Let's see here. There wasn't a Reuters poll for that. Let's see here. Lower than the prior month, you can clearly see that. At the bottom of the hour, though, we do have UK data. We do have CPI and PPI data for UK data at the bottom of the hour. Then at the top of this next hour, we do have Italian trade balance and Eurozone HICP data coming in. Now, let me take a look at something. Let me see something here. Okay, and let's go take a look. Amanda was talking about, she was just actually just mentioned chat room, so that's why I was just kind of answering back on that. She was asking about this this marker we saw right here, and whether that was a gravestone doji. And it is, but here's the deal, is tonight's a BOJ, or tomorrow morning, depending on what neck of the woods you're in. So I was saying here is that the BOJ could nullify that. But the only thing is the wick's a little bit short. And usually sometimes you'll look at some, and I'll see if I can find one here. Sometimes the wick is too long, you know what I mean? So, but we probably want that wick to be a little bit longer so it would look more pronounced. And let's see if I can find one in here for you. Like, I'll give you an example here. This wick is a little bit too long to say that's a gravestone doji. Okay, although we did go in and pull back. I'm just saying is, and that's only on a two hour chart here. But I was looking, I think there was one with, let me go look here. We certainly have a lot of time today with, I could have sworn, and the gravestone doji generally is going to be at the top of a move, and certainly this is at the top of a move here. I'll tell you what, here's, let's see. Okay, great, here, right here. Let's see. It is, the only thing is that the wick's a little bit, here's one that's a little bit, you see how this one, it's not as long. Okay, now that looks like a gravestone. You see, even though the wick is a little bit light. Now, yesterday we were looking for the cable to make it potentially up here to 25.18, confluence with 25.27 to 161%, and we made it right there. We did make it up there to 25.27. Next, we made it up here to 25, right at the nose, 25.27. And I didn't even participate in this. Actually, I saw, I mean, Blake was mentioning, hey, I think it's still going to hit there. And I think we were just under 125, and I almost thought about just taking it. I go, well, that's kind of a stupid trade. I'm thinking to myself, I go, for me to come in right now, 124.99. But I thought, you know what, it looks like it's probably going to get there. The only thing is I did miss is that it was already coming back by the time it hit it, or else I actually would have taken a little bit of a short there and saw what could happen. I wouldn't have hung around for that long, but we were able to recede back to 25. So, but this one, even though the wick's a little bit short, not too long, but you can see that's more pronounced. Here on the daily with the dollar yen, if you look at this, You see, and the only thing is probably if the wick was a little bit longer, it is after a good run. But here's the deal, and I'll give you an example right here is we've got the B. Now, when you look at this in context, if you pull this way back out here, you probably say, yeah, that looks like a gravestone doji. But if you look at it a little bit more in context, that was a very, very tight range day. You see what I'm saying? Almost non-registering, almost to a certain extent, if you look at that. And here's a thing, though, is tonight, or depending on what neck of the woods you're in, is BOJ. So I'll give you an example here is that, let's go and move into, okay, like you can, let's go and pull up this crude oil. We've already rolled to the November, so this mark is showing like a 10 tick premium to where the November is. So discount about 10 ticks, and that's where you're at. Anyway, that being said is, so when you looked at this chart here last week, like Blake likes to do, he'll edge off the thing, you know, here, but it looked like, oh, this market is breaking down. Look at it. It's so weak, it's breaking down. And then what the heck? And what the saying always goes is you always want to trade with technicals, but I always say overwhelming fundamentals, which is kind of what they're saying. Overwhelming fundamentals will always kick technicals in the A. You see what I'm saying? So, you know, you can be looking at chart and go, man, that is so bearish. We're probably, and I think people were looking for moves down here, down to 45, 47, wherever. And then when you see something like that, an overwhelming fundamental will kick technicals in the A every time. You see what I'm saying? So to get back to the dollar yen, that is, you could go in and state here, although the if you look at it in context, you're thinking, whoa, that's okay. Like this is more of a better, you see here, this is after, I'll give you an example right here. You see we've had a pretty good strong move from here, okay? You see how we've had a pretty good strong, we continue, and we run up and we make one more, we make a dip here, we make one more challenge. Now that you could, that you would say is a gravestone doji. You see what I'm saying? See how that wick, it's not too long, but you see it makes another challenge. So you're looking for the market to get tired, okay? So essentially you almost had, I wouldn't say this second one is a gravestone doji at all, but you can see here that when you look at that, you say, oh, well, the market is probably getting pretty toppy. This is probably a pretty good area to go and take a short, because you're saying, hey, look, this is after a pretty good run, okay? And you can maybe even say that, although this, you can see this one right here. You see right at the tip here, once again, the wick's a little bit short, but it's still, you see after this, it's a little bit longer. If you look at here, this is barely even a nudge right there, you see? But this is after a pretty good little run here. But here's another one right here is when you're looking at patterns, and I'm not too much of a pattern guy myself, I'm just saying, but when I look at as far as candlestick, I don't want to say formations, but just the candlestick themselves. So you take a look up here and you say, wow, this is, it's the market's trying again, and you get this little gravestone doji right here. Pretty good thing where the market opens here, rallies, it doesn't go too far up, and then it finishes at the lows and it looks like, wow, this market just doesn't have what it takes to get up. It just looks like it just wants to roll over the old, you know, I've fallen and I can't get up. And so the market's susceptible then to a slide, okay? So, and these aren't as pronounced, and the body's a little bit fatter here, but here, you see right here, the problem with this one is, and technically it is, if you look at it and you, like I said, you pull it back out, depending on, like I said, your perspective, you pull it back out here, you say, yeah, that looks like a good gravestone doji there. But here, once again, is tonight's BOJ, and that's why I haven't touched the dollar yen. Like I want to go and take a couple of stabs up here around, I myself want to take a stab like around 798, 804. Even when it came up here at day 27, although it did take a little bit of a dip, problem is I don't want to get in the way of the BOJ, because if they're expected to do, you know, put on some decent stimulus, and if they do and the market likes it, we're going to jump up here. So when I did the basic technical analysis last night, if you're a ForexAnalytix subscriber, I did go and put on here that potentially, and that's if they do a lot of stimulus. We do have FOMC and this, but the market's susceptible that we might make a run up here to 880. Okay, no guarantees, but we make a run up here. That may squeeze out some people, and then we may fade at that point, or we may set ourselves up to go on and fade. Then maybe we may kind of hang around, and then we'll start to slide. But right now, like I said, we're looking at a fundamental event that it could be. Not all BOJ meetings carry as much weight. This one looks to carry some decent weight. They've even been talking about stimulus, so we're going to see what's going to go and happen. Obviously, the FOMC is going to make a big deal also. So with that, let's go on and we'll go on and take a look at this story. So let me get to that. But I'm glad that she did, Amanda did mention that, because that was very, very helpful. So let's take a look at the stories here. Australia and New Zealand dollars in tight ranges ahead of key data, the Fed rate outcome. The Australian and New Zealand dollars on Wednesday came back up from recent lows against the greenback, though trading was light ahead of key economic data in both countries and an expected U.S. interest rate cut. The Aussie dollar was slightly higher than a 7-day low of 68.30 touched in the previous session. The New Zealand dollar was down 0.2 at 63.42 after hitting a 2-week low of 63.21 on Tuesday. Investors are focused on Australia's August employment data due at 1:30 GMT Thursday, which is likely to show the jobless rate rose to 5.3 from 5.2 in July. A higher number would bolster the case for a rate cut as soon as October. In New Zealand, the figures on the country's economic outcome, also due Thursday, will show second quarter gross domestic product slowed to 2% from a year ago, which would be the weakest pace since 2013. The central banks in both countries have adopted an easing bias after recently slashing rates to record lows of 1%. Both have shown openness to move again if needed, signals that have put downward pressure on their currencies. Investors' attention will also be on a rate decision by the U.S. Federal Reserve, which is all but certain to ease policy to 1.7%, 1.75 or 1 3/4. To 2% to help offset some of the impact of the country's ongoing trade war with China. Markets will focus on any indication about future policy, especially after Fed Chair Jerome Powell had described the last cut in July as a mid-cycle adjustment. Some analysts believe it may be the last rate cut on a while, unless there's more evidence of a U.S. economic slowdown. A 25 basis point cut is well priced in. So in the absence of any surprise in the rate move, investors will be looking at the message of the statement and subsequent press conference, said Nick Twildale. The risk probably sits once again with the hawkish cut, and that's if it comes to fruition, then the stock markets to take a hit along with risk trades overall. Overnight, the dollar was also weighed down by fallen oil prices and a stronger euro. Dollar purchased at 7-week high versus yen before the Fed decision. The dollar held a 7-week high against the Japanese yen on Wednesday before the outcome of a Federal Reserve meeting where officials are widely expected to cut interest rates by 1/4 percentage point. The focus will be on the policy outlook and the Fed's dot plots, and with market positioning broadly neutral, should be a quiet session for the dollar, said Tu Lan Wan, currency strategist at Commerce Bank in Frankfurt. Against the yen, the dollar edged up to 823, just below a 7-week high of 837 yen tested overnight. The dollar index against the basket of other currencies rose to 98.28. The dollar has been driven more by trade tensions between Washington and Beijing this year than by the U.S. monetary policy. Morgan Stanley strategists believe that any dollar upside is likely to be capped because market expectations are not overly dovish, and a trade deal between the U.S. and China seems likely. A retreat in global oil prices restored some calm to the market. Oil prices fell in Asia, extending Tuesday's 6% decline after Saudi energy minister said the kingdom had tapped stockpiles to restore supplies to where they stood before the weekend attacks. The euro was steady at 10.62. We saw the euro, I think it's 10.54 right now. Despite negative rates will be an option if the BOJ eases, although central bank may accompany that with measures to mitigate the pain of financial institutions, sources have been told Reuters. That's why I don't think you're going to get a real sense of, or not real sense, but where uh, um, a trying to think a resolution here with dollar until we get past the BOJ. Bear with me. So let's go move into the charts. So we saw pretty good recovery here with the euro. And what I was mentioning in the basic technical and the Asian analysis is, look, we came back almost, eclipsing even the prior day's high after that was such a heavy sell-off. And what we're looking at now with the resistance is the immediate resistance is going to be this 1113. But if we can get a daily close above 1153, that will open us for a challenge of 1285. And it really turned this thing bullish at this point. If you look at it from a trend line perspective also, let's take a look at this. You see that? So we have the opportunity to go in and break higher. And the first key resistance, which isn't even that far away, well, a little bit further now, but we're 1054 now, is going to be 1113. Followed by, if we can get a daily close of 1154, let's call it 1154. Wow, this will open this market technically to really move higher now. I mean, we could get clipping. Now we could come up to 1113. We may even exceed that and turn around and lay a big egg and turn it and slide right back down. But I'm just saying is that's gonna be our initial resistance. But once again, if we can get a daily close above 1154, wow, this thing could really get going. And first target would be, I mean, there'll be a pause here at around 1215, but we'd be looking for 1285 on this one to start with. So. There, 1150 would be huge if we can get past that. And right here, we're showing here 1133. That's going to be our 1133. What am I saying? Hang on, 1033. That was our bias chart support from 2 days ago, and it was critical, and the market eventually fell below that. And then it became our bias chart resistance on the way back up. We got above it, so it's back to being support. That would be our support level that we'd be looking at. Breaks lower beyond that, and that just opens the door for us to. Once you get past 1033 and we grab a foothold, then this market, they're just going to slide back. The only thing I will say about yesterday about the euro is that we really received a very poor data from Germany and on the zoo, and it was the zoo yesterday. Doggone, hang on a moment. Say the wrong one. Hang on. Oh, there we go. Hang on 1 second. Yeah, it's a zoo. Look how bad this was here on the Yeah, look how poor the data was here. And if you look at this, I was remarking, I was like, I'm surprised that we're not even, that the euro hasn't even gone sub 110. So my thoughts being, it actually held up very well, and that really turn this market around to get clipping. And with that, take a look here. Okay. With that, we were able to go and get this market to this euro to really turn around. And so if we were to slide back below this 1033, it really would open the door for this market to go lower. But I will say this is that it seemed like at that point, then it seemed like the market had almost bottomed out at that point. I myself had gotten out of the euro that I'd held, and then I did an ad, but we I have to give it its due that it turned around. The only thing is, I will say there were several major banks, not all, but that have been liking the euro down here. So we'll have to see what happens. I mean, the proof's going to be in the pudding, and you can see this trend line. And if we can get a close, I mean, 1113 is key, but if we can get a close above 1113, certainly that'll open the door for us to push a little bit higher. It'll change the tone. We'll have broken the trend line, but daily close above 1154 would really set this market to move higher, and the first target would be 1285. With that, let's go move into the cable. We've already spent quite a bit of time on this. We do have a plethora of data coming out in the next few minutes for the sterling. We did make it up to this 25 to 38%, but if you look on here on the 2-hour chart, this is what we've been looking at. We finally did meet that yesterday, which is at 25.27, the 161%. Looking down here, and let's go and move in here. Now, here's my thoughts on this is we need to move into the 2-hour chart. This market's had a phenomenal run already. And actually, you've already seen it receded. We've already pared back a decent amount here at this point. My upside target, I'm looking here, is going to be maybe not an upside target, but our upside stretch. I think the market would have some trouble getting past this 25.73. Although we're already pulling back, so at this point now that'd be well over 100 pips. So looking into the FOMC, at this point now we'll go with 25.43. 25.43. And support is going to be right there, 24.28, which isn't even that far away at this point now. Last night we were up much higher. We're still paring back. And don't forget, we do have data out at the bottom of the hour. We'll move this just a hair lower right there. $24.13. go move into the Aussie dollar. Well, you can see it right here on the 2-hour chart. We've already paired back into the 68.34, which is very good, solid support, but will allow for just a little bit lower of a dip. Actually, let's see if we can see a better touch coming in right there. Let's call it 68.16 on the downside. And on the upside, 68.72, 68.72. Let you get these Aussie and the Kiwi in before the UK data. Boy, this Kiwi is really sucking wind right now. Potentially we can slide back here, and God, boy, is it really giving up a lot of its gains. They'll be looking at that 63.16. We already have that, and 63.68. So those two are going to remain the same, and boy, it's definitely bearish. Excuse me. And I just thought we'd go and move into the cable pairs before the release of the data. So right here we've got the guppy, the sterling nod, and the cable right now. And now that's a very nice gravestone doji there. You see that one? See, that's an excellent example of a gravestone doji. And you can see where the market ran out of gas. It's also up in here, and you see this market going in pair back. And data is going to be coming out in just a minute. And you can see here CPI is expected to pop up, going for 0.5%. PPI down, expected to be 0.2. And we're 10 seconds away. Okay, here we go. And we'll drop the cable down a little bit here. CPI 0.4%. A little bit weaker. Not much of a move, but we were already under some pressure already here with the cable. But here we are, 24.54. And let's go and move back into the charts. Okay, let's go and take a look here at the dollar CAD. Well, overall, we've had a pretty strong week here with the dollar CAD, and I say strong in the sense that I thought we would have opened up sub 32 on the heel of the attacks. It started to look like we were heading that way, and then Trump said about the SPR, and then the CAD turned around. We paired back a bit, but then we reasserted ourselves. And so we've kind of had a little bit of an up and down, but you still got to say that we're still trying to push higher. Resistance is clearly going to be this 133 even. That's going to be the key to get above. Actually, we can look at it right there. 3306. 3306. You can see that coming across right here. 30. Let's call it 3307. 3307 on the upside. If we do get the dollar to strengthen. And on the downside, it's going to be right there at 32.24. Let's go move into the dollar peso. Now, this one really did weaken a decent amount. And we made a return trip right down to 1937. Now, we had been looking actually at 1954 for our bias chart resistance, and that's right where it went to. We took it out by just a bit. See, it took out the 1954. That was our bias chart resistance for yesterday. And it took it out by just a bit. And we turned around and came back. And we had some, I mentioned we had some volume support at 1943. I know some people were trying to pick it up at 47 and even a little bit higher. And then I said, but our bias chart support was at 1940.7. Well, we even dipped below that. And we made a run down here. Now, how low could it go? Well, here's an area right here that I was looking at the beginning of the week when I thought we'd be under more pressure. 1932 is 61%. And there's a little bit of a touching right there. So let's call it, I've already fallen so much. I'm just going to go with this 1932 as a 61%. We've already come off, and we're already below the 1937. So 1932 on the downside. which is a 61%. On the upside, we're gonna, for right now, we're gonna look at 1945.5. It's still bullish as long as it's staying above this 1923. Oh, that's been a hell of a move lower. But it's certainly in jeopardy now. We'll have to wait till after we get past FOMC, but certainly in jeopardy of changing that. Let's go move into the dollar yen. We already made comments about that, and I'm looking at 880 on resistance. You see that right there, 881? Potentially we can get there. Now there's resistance here before here, which is 856. So you've got this zone here between 856 and 880, but 880, so and we had our bias chart resistance at 834 and market topped out around 837. It's going to be 856. There you go. It seems like that's close, but look, there's some initial resistance here. There's actually, 55, and 81. But we're in this zone here. You see here? But we'll have to see what happens with the BOJ. I mean, it's certainly going to have things under pressure, so. If I go to 881, people are going to think, oh, wait a minute, that's 60 pips away. That's too far away. Well, I mean, we've got 855. So if we get FOMC, you could come up there and jump up to 855, roll back down the hill and come back down to around 830, 828, and then still have set up for the BOJ to come up there and actually jump up to 881. So that's why I want to put in this level here. On the downside, we'll go with the 787 right here. We'll keep that that we had before. On a bigger scheme, I mean, bigger outlook, if we were to close below 752, it really opens the door for us to go eventually make a trip down to 674. And I mentioned that in the basic technical that was done overnight. So with that, we'll go and move into the cash dollar index. Here it is with the cash dollar index. Upside is going to be right there, 98.76. If we get a daily close above that, it really opens the door for us to relaunch. And it's the same thing on the downside going in reverse. To me, there's your support right there, 97.56. Potentially, I mean, 97.89 is important, but we're not that far away. Obviously, the dollar index has worked a little bit higher than we were earlier. 97.89 is key, but the big figure is going to be this 56. If we get a foothold or we get a close below 56, that's it. The dollar index be able to go to 96.50, technically speaking. So on the dollar index, it's going to be there. 97.89. We get a close or a foothold below 56, and it opens up the door for this market to go down to 96.50. With that, we'll go into the cross rates. And looking here with the Kiwi yen. Well, with the BOJ, this one could be a little bit tougher right here. Support's going to be 68.26. And resistance will be 68. We'll go with 68.76. We'll keep it pretty tight. 68.76. But this is going to be all over the place, to be quite honest with you. And we already had that. Let's move it up 1 pip. Let's go into the euro yen. Here's another one that we can see a pretty good movement. Let's go with 1926. And on the upside, once again with the BOJ, we could really see this thing start to move. Right there, 1995, 1995. Certainly bullish. And the euro odd. Resistance is pretty clear. It's going to come in right there. $62.02. And support's going to be right there at 61.10. 61.10. We did go and tag up here to the 78% here with the Euro QE. The resistance is going to be just a bit higher. Right there. 74.87. And support's going to come in right here. 73.67. Actually, going to have to move that a little bit higher. It's going to be 73.94. This has the potential to move quite a bit, obviously, with the BOJ. It's going to be 73.15. And the upside will be right there. 74.41. Actually, 74.46. Going to be 74.46. And on to the guppy. It's going to be 35.55. And once again, like I said, it's going to be, you're going to see potentially some pretty big moves here with the BOJ with some of these pairs. So right there at 34.17. And moving on to the sterling odd. $81.40, and on the upside, it's going to be 82.81 because we do have Aussie data later tonight, which can impact. It's 82.81. And there's the bias chart ahead of FOMC. And we'll see y'all later on the FX Daily Roundup ahead of FOMC. And thanks for joining us here on the European Crossover webinar.